Hi everyone, thanks for attending today's webinar about momentum and momentum trading. I will be waiting for our last people to connect, and before we go any further, I would like to confirm if you can hear me fine and if you can see the slideshow and the slideshow only. Perfect, Bruce, thanks for the confirmation, much appreciated. We'll kick the webinar off within next couple of minutes. While we do that, I will go through the risk and the disclaimer. Contents of this material are provided by third party, not hot Forex, and are for informational purposes only and do not constitute investment advice. Hot Forex and Blue Sky Binary assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. So with this out of the way, our agenda today will be a quick introduction of me and my team. We'll take a look at two types of markets you will encounter during your daily trading activities. We'll quickly discuss what is momentum and what is the momentum indicator and how to use it. We'll then go through stop loss and take profit levels, and we'll talk about dangers with trading in overall. And of course, as per standard, we'll have a Q&A in the end. So if you have any questions during the webinar, please mark them down somewhere and then ask them at the end of the webinar during the Q&A. Now, this webinar is directed more towards the beginners and who have not really been, so to say, in touch with momentum, what it is, and how to use it. So let's launch this. I'm one of the senior traders in Blue Sky Forex, which is a part of Blue Sky Binary. We are an education and research and a trading group. We provide 24 trade support and candlestick pattern analysis just to allow the binary option and FX traders to trade safer. Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. So, two types of markets you will come across during your daily trading is price action and mean reversion. Price action, aka trending market, it is more powerful because in most cases it's fueled by significant news. However, identifying a proper trending market is a bit more difficult than identifying a mean reversion, aka a ranging market. The ranging market is definitely more common. It is a bit easier to identify and definitely can be profitable. Of course, depending what strategies you use and how do you approach trading in overall. Momentum trading itself relates directly to price action, trading with the trend. The momentum indicator, however, can use to be for finding reversal opportunities even during a ranging market if you're really good. But for a training market, finding the reversals is definitely something that can be done with the momentum indicator as well, believe me or not. So let's take a quick look at the ranging market and the trending market. Now, ranging market is something you see on the left. If you see my cursor here, as you can see, the price bounces between the closest support and resistance levels, right? So when it reaches the below support, it bounces back up. If it reaches the above resistance, it bounces back down. So as long as it keeps on doing that, we are dealing with a ranging market. Now, a training market is a different story. Now, as you can see here on the left side, the price breaks out from the range and it starts trending. But as you know, the price never moves in a straight or linear line. It always moves in waves. So if you are familiar with Elliott wave theory, then you know what I'm talking about. If you are not, then it's worth looking into, but you don't necessarily have to understand it in order to trade successfully, but it will be beneficial. Okay, so as you can see, we're dealing with the upwards movement towards the trend. They are called impulse waves. The waves or the movements that are against the trend are called corrective waves. Okay, so we're dealing with a short trend here, which results in significant indecision. And again, we have the ranging market, which goes back into trending. We have a very brief ranging market here again, which breaks out, then goes back to trending. So it essentially switches between those two market types. So into the core of today's topic, what is momentum? I translate momentum into a strong, immediate, and consistent price movement in one direction. As you can see in the picture on the right side, we have pretty strong momentum going on here. A lot of green candles straight in a row. Significant movement compared to what has happened before. It actually was relatively ranging and consolidating. The candles were approximately this size, as you can see in the left bottom corner of the picture. Momentum in technical analysis, it refers to the overall rate of change in the price of an asset. Okay, so I will show you the formula as well for the momentum indicator and how it's calculated. And again, momentum can be identified by the overwhelming multiple same directional relatively stable candles. So exactly what you see here. They're mostly with the same candle body size, and then they move in the same direction, and we have a lot of them in a row. So the indicator itself, as you see on the picture, the blue line at the bottom, that is a momentum indicator. I set the period to 14 because this is the most common period to use for the momentum indicator. That is based on what traders are saying. I, however, personally use a different period for the momentum indicator. I'll show you that a bit later in the actual MetaTrader 4 and the live charts. Okay, so the momentum indicator itself in MetaTrader 4, it shows the comparison between the current candle's price, meaning the currently open candle's price, and the closing price of the candle that has closed a certain amount of number of candles back. Okay, what I mean by this is this momentum, as CP in the formula, that shows the current price, and CPN means the closing price of the certain number of candles back. Okay, so essentially you compare the current and the closing price of the certain amount of candles back. I hope that made sense. It's actually really straightforward and really easy. So the formula itself is not the most important part. The most important part is how to use the momentum indicator in different scenarios. And I have brought out 4 scenarios or 4 ways how you could use the momentum indicator. The very first option is crossing the 100 level. This, if you can see it, I hope you do, there is a middle gray line at the top left picture. and that indicates the 100 level. Different chart providers, different systems will indicate the middle line differently. So it either can be 100, like in MetaTrader 4, or it can be 0. Some chart providers show it as 0, but it doesn't matter essentially. The calculation formula is still the same, and the usage scenarios are still the same. So crossing the 100 level is the first scenario, the first option, how you can use the indicator itself. As it crosses the 100 level, essentially you can go long. Okay, as you can see on the price chart above, the price essentially had momentum, slight momentum, of course, upwards as soon as the price crossed the 100 line. The next scenario is crossovers of momentum indicator and other indicators. On this picture on the top right, you see that I have also drawn a moving average of the momentum indicator onto the same chart. I will show you exactly how to do that in MetaTrader 4 a bit later on. And this is I believe personally, this is the best way how to trade it. And I will show you how to find trade opportunities based on this option as well. Okay. So as soon as the momentum indicator crosses the moving average from top to bottom, for example, as in this example, you go short. Okay, as you can see that this would have been your entry spot, and trading short here would have actually carried proper profits as well. Okay. All these examples are brought from Euro USD 1 hour chart, as I like to do. So the third option how to use the momentum indicator is the divergence between the price and the indicator. As you can see here that these red lines that I have drawn onto the price chart itself and the indicator, this shows a proper divergence. Okay, please bear in mind that within the momentum indicator, between the momentum indicator and the price, the divergence, to my mind at least, happens a lot more often than divergence with the RSI and the price, in example. So definitely, please be mindful, be careful when using the divergence variant with this indicator. But this chart, this price actually went downwards relatively quickly from this point onwards. I just had to fit, I wanted to fit the pictures here, so I couldn't really show you what the price did after the divergence happened, but it actually went down quite significantly. Okay. Now the fourth option is searching for the overbought and oversold conditions in the momentum indicator. Now, very important to note that the interpretation of overbought and oversold within the momentum indicator is subjective. The reason behind this is that there is no upper or lower limit in the momentum indicator. It essentially can go on indefinitely. So this is the reason why it's subjective. When there is a lot more volatility, you can see that the momentum indicator value can go up to 1.19 in certain cases, example. Okay, so what I recommend to do in this case, just visually analyze the momentum indicator and try to identify the tops and very high tops and very high lows of the momentum indicator and compare it to the price. So it will help you a bit to identify the tops and the lows of the price, just to find the trading opportunities. This is one of the example. I drew another gray line here at 100.75, and on this occasion, on this example, this would have been my overbought condition, and then the price reversed here. Okay, So keep that in mind. Let me then go to the live MetaTrader 4. Let me show you the second option, the crossover of momentum indicator and the moving average. Okay, I already drew a momentum indicator on this chart here. Let me remove it. I'll show you how to add it for those who are not too familiar with the program. So you should be seeing the MetaTrader 4 right now. Okay, so from the top left, you go to Insert, you go to Indicators, you go down to Oscillators, and you select Momentum. Really straightforward. Insert, Indicators, Oscillators, and Momentum. It will pop up the settings box where you can define the period. By standard, it's 14. What I do, I insert 45, okay, and I apply to close. That's per standard. Now for levels, I definitely want to add the very middle line. In MetaTrader 4, it is 100. So 100 will be one of these levels. I will also add, so now definitely pay attention, because this is my method how I would use the momentum indicator. As for my daily trading, I use generally different technical indicators, but this is how I use the momentum. I add another line of 99.5, and I add another line of 100.5. So 0.5 in both directions from the center. Makes sense, right? Okay. Click OK. So now I have the momentum indicator here with the center line, then 100.5 and 99.5. I'll show you exactly why I added those levels as well. Right now, we have a quite a trend going downwards on Euro USD in 1 hour chart. This is the chart that I always use for bringing examples. Quite significant momentum going downwards here, and you can see how the momentum indicator is relatively low. 98.6667, okay, is what the scale shows me. Right, now I'm going to add a moving average on top of the momentum indicator. Now, one thing to note, if you go insert indicators, trend moving average, and click OK, it adds the moving average onto the price chart here. But this is not what we want. You cannot add the moving average from the insert menu at the top. Okay? You can add it when you have the navigator open. You can open the navigator here. There's a star and a folder sign in the toolbar. If you click that, that opens the navigator. Find the moving average from the menu here. It's under the trend category. Now drag the moving average onto the momentum section. If you apply it to close, it will still add the moving average onto the price chart. So what you have to do is you have to apply it to first indicator data. Okay, so add it to first indicator data. The period of the moving average, let's set it to a 9 as I had on the example in the webinar material, and the method will be smoothed. So we'll be using a smooth moving average in this case. So now it adds the moving average onto the momentum indicator itself. Okay, momentum is considered as a leading indicator. So keep that in mind, because that provides a quite good trading opportunities. Now, what you can do to find good entry opportunities with the momentum and the moving average combo. Okay, so let me show you something. Now, the reasons why I added these lines here, 100.5 and 99.5, is when our moving average is above the 100.5 level and the momentum crosses the moving average from top to bottom. I hope you see my, actually, yeah, this is better. You can see it right here. When the momentum indicator crosses the moving average from top to bottom while the moving average is above 100.5 level, you initiate a short trade. Rajini Rayo is asking, what is the difference between short and long? Short is when you trade down, and long is when you trade upwards. Okay, so long is buy and short is sell. Okay, so you go short when, again, when momentum indicator is crossing the moving average from top to bottom, while the moving average is above our 100.5 level, you go short. As you can see, that would be a perfect entry, and you exit the trade. There are two options. Sometimes the first option works best, sometimes the second option works the best. So it's up to you which one to use. Okay, keep that in mind. But in most cases, you should be profitable while using either of these exit options. Now, I would exit the trade as soon as option one, the momentum indicator hits our lower line at 99.5. So this would be your exit. You trade from here to here. Let me just, your entry would be somewhere here and your exit would be somewhere here. So quite decent profit. The second option is when the momentum indicator crosses back up our moving average. Okay, and the moving average in this scenario needs to be below our 100 level, the center level. Okay, so in this scenario, the exits would have been almost at the same level. Here would be our exit approximately at our second level, second variant. Okay, so either way, this would have been a profitable trade, definitely. So I hope that was relatively clear enough. Let's take another example. Don't worry, guys. I will answer your questions at the end. I can always come back to the MetaTrader 4 to show you a few additional examples. Okay. We have another entry here, as you can see. One more thing to keep in mind. As soon as you have one entry already, and then the moving average keeps on lingering above the level and the momentum goes up and down and crosses the moving average several times, that does not indicate several entry points. You should still only consider one entry point. So you enter once only while it is up here. Okay, let's take another example. So here you see the moving average has moved below our 99.5 level, the lower level, and the momentum crosses from bottom to top of this moving average. So this would be your entry point somewhere here. You see the large green candle. Let me just zoom in a bit. Where was it? Okay, large green candle here. And in this occasion, as you can see, the first exit option would be when our momentum indicator hits the top level of 100.5. So this would have been our exit somewhere here. Let me just mark it down. This is the first variant of your exit. You would exit here. The second exit would be here. As you can see, the momentum crosses the moving average back from top to bottom, while the moving average is above the 100 level. Okay, so in this occasion, you most likely would have got a slightly lower profit than with the first variant, somewhere here, because we have a significant bearish candle going on here. Okay, so two examples, both of these trades would be profitable. Let's see if we can find a trade that would have not worked out. Okay, this is questionable because I can see that the moving average most likely might have been below the upper level in our momentum indicator. So not sure whether we could have considered this as an entry point. If you see the moving average be or lying on top of the upper level, then you can skip the trade. It's totally fine, and then just wait until the momentum indicator actually hits our moving average again. Okay, right. So let's see, on this occasion, our entry, if we don't consider this entry point here on the left, which is on top of the upper level, but we consider our entry point here when it actually crossed the moving average. Let's see where our candle is. This is the one, so our entry level would have been somewhere here. Now let's see how it would have played out. Okay, there was a significant move upwards. I can see here. Let's see how significant the move was. All right, it was more than it was 120 pip move. Now, of course, depending on your risk appetite, you can trade this without a stop loss level, or visually later on close the trade manually if you see that it's not really delivering any results. I would focus on the take profit levels based on these conditions. Stop loss level, that you need to determine yourself, just to practice this a bit on a demo account and see how far the price can move away from your entry point in the other direction, and then just set your stop loss levels accordingly. Now, on this example, our exit would be, the first option is when it hits our lower level, which is here. So essentially, we didn't really win much with this trade. And our second exit point would have been here, which is better, somewhere here. So with the other trade exit method, you would have actually made a decent trade. Okay, so you can see how both of these exit methods deliver different results based on, trade by trade basis, right? So it's up to you which method you want to use. You can switch between them, it doesn't matter, or you can just get used to one of these methods and then start using that one only. So that is completely up to you. Okay. Right. So. Okay. These were the examples that I wanted to bring. You can see that there are definitely enough opportunities for trading this method. And okay, on this occasion, let me just bring you an example of a losing trade as well. Okay, as you can see here, we have a very significant momentum of the price. The moving average is above our upper level. The momentum crosses it from top to bottom. Our entry would be here. Okay, and depending on your exit method, you would have either exited somewhere here or exited the trade somewhere here. Anyways, it would have been a losing trade. Okay, so definitely no technical trading method is perfect. None of these methods will bring you 100% trading accuracy, and no methods will. I can assure you that. So keep that in mind. But very often it does bring, to me at least, from price analysis and how I have traded it myself, it has brought quite good trades. Let's get back to the slideshow and quickly discuss the stop loss and take profit. In overall, stop loss and take profit levels should be determined by your trading style, your risk appetite, and how you approach trading in overall. Okay? Whether you are scalping, in this case, your stop loss and take profit levels should be somewhere around maybe 20-30 pips. And if you're position trading, obviously you're aiming for these large price movements. Most likely you're aiming for 100, 150, and 200 pip moves, even more. For trailing stops, when you are scalping, it doesn't make sense because the short-term price fluctuations can render your trading stop to be hit relatively easy. Okay, so it's actually counterproductive. If you are longer-term trader, of course, and you're aiming for these large movements, then setting your trading stop for around maybe 20-25 pips is totally okay, and it actually can serve as a quite good stop loss method. Definitely needs some practice. Trailing stop needs actually some practice, but a lot of practice. How to set the levels correctly, depending on the time of day and what are your goals. Risk reward. Always keep it at 1-to-1, which means your take profit and stop loss levels are equal. Like in example, 30 pips take profit, 30 pips stop loss, so they are equal distance away from your entry. Better is to aim for a more positive risk reward ratio, 1-to-2 in example, which means your take profit level is 2 times the distance of your stop loss. In this case, you are potentially profiting from the trade twice as much as you are potentially losing. Okay, so risk reward is very important to keep in mind. Never wager more than 1% of your total account equity on a single trade. And if you have lost more than 5% of your total account balance during a single trading session, then simply stop. That means it's not your day. Just in this way, you will live to fight another day. And don't overtrade. If you start overtrading or revenge trading, then that's a recipe for disaster, and you will most likely empty your account sooner or later. Okay, so you have to set these rules when you start trading. It's really important, and stick to those rules. Another really important thing to keep in mind is when you set your top stop loss and take profit levels when you enter the trade, it's important to not play around with those levels anymore. When you enter the trade, leave the trade be. Don't bother it. Okay? If the price moves against your desired direction and you start playing around with the stop loss just to give the price a bit more headroom, hoping it will still go to profit, it might not. It might still continue heavily moving against your desired direction. And if you have played around with the stop loss essentially moved it further away from your entry, then you are going to risk more of your trading capital, and you will be losing more. So please don't play around with the stop loss or take profit levels after you have entered the trade. So keep that in mind, please. Okay, another thing. A very common practice is martingaling. Who doesn't know what a martingaling is, I would highly recommend stay away from it, because when you martingale, you can also easily and very quickly empty your account. Martingaling means you will trade the same asset, but you will enter multiple positions, and you'll double up your lot size each trade, each time, hoping that when the price moves against you, you definitely sure you get a better price, and you invest more into that new trade, but the market can stay trending longer than you can remain solvent with your account balance. Okay, so ultimately you have many trades going on. Each and every trade is with a higher lot size, and eventually will just be put out on the money. Okay, so try to keep away from martingaling. It's really dangerous. Even professionals fail and empty their accounts at the very end. So it's definitely a no-go for a starter or even an average trader. What you can use instead is dollar cost averaging, and this method is a bit more safe. It has some elements of martingaling in it, but this is gently building up your original position. So let's say if you trade with lot size of 1 by standard, when you apply dollar cost averaging, that means that at first you enter the trade with a lot size of 0.3. So you're not applying your standard lot size for the very first trade and single trade. So first trade is 0.3. When the price moves against you, then you enter another trade, a new trade on the same asset in the same direction, again with a 0.3 lot size, let's say after 15 pips when the price has moved against you. Okay, so now you have two trades open, both in the same direction and same asset, but the second trade is with a better price. And if the price again moves against you, you enter the third trade with a lot size of 0.4. So ultimately you have three trades open and totaling lot size of 1, which is your standard lot size that you usually apply. Okay, so you are not risking or sort of say trading with a higher lot size. However, you have multiple trades open. Each and every trade is with a better price. Okay, now this will spread out the risk on a single trade, and just to keep in mind that if you have a very high trade accuracy, like 75% in example, or even 70%, then dollar cost averaging might yield lower profits in long term. If your trade accuracy is around 50, 55, or 60%, then dollar cost averaging can definitely increase your profit gain on the long term. Okay, so keep that in mind, please. Okay, so some basic and overall dangers when you're trading. Don't trust bots or expert advisors or automated trading mechanisms or systems that are advertised and sold on the web. Most of these are scams, and they are driven by affiliate marketers who are not traders, who don't know anything of trading. They have just taken a few formulas or indicators and mixed and matched them together into one system, and then they are selling this as a successful 99 or 90% accuracy trading bot or system that will make you a millionaire within the next 2 or 3 months. This is how they usually advertise their scam trading bots or expert advisors. So if you find an expert advisor or a trading bot that you actually want to use and try out, then please do a significant background check and apply onto a demo account at first, at least for 2-3 months, and see how it plays out. If after the 2-3 months it actually has earned some profit to you, sure, you can set it onto a live account and see how it works. But in this case, definitely use very low lot sizes, okay? Because there are very few amount of expert advisors out there that can actually earn you profit longer term, right? Trust me, I have tested out thousands of different expert advisors, and each and every one of them fails at one point. Okay, even after they have earned me a profit for a month or month and a half, then after 2 months or three, they either empty my account or they lose all the profit and even more. So they are not consistent. They are not able to earn consistent profits a longer term. A second thing is news. If you are new to trading, or even if you are already a bit familiar, but you are on average trading still finding yourself in this industry, then try to stay out of the market when there are significant news. Okay. What are the significant news? Of course, it's a webinar for another time. But always have the calendar next to you. Most of these calendars also show you the strength of the news, either it's low, medium, or high. If you can see that there is a high impact news hitting the market, then definitely stay out. Half an hour before the actual news hits, and depending on the news, half an hour or maybe even an hour after the news hits, because the news can make the market jump up and down, so to say, and can really easily put you out of the money if you initiate the trade. So please be very careful. And the last thing, if you are a technical trader and you use a lot of indicators, then one of the dangers is if you use very low periods for the indicators, which make them extremely sensitive to the current price movements. That renders the indicator to display a lot of false signals. Okay, so you can make the indicator very choppy, and thus it generates a lot of false signals. So of course, depending on the indicator, the standard period very often you can see across indicators is 14, like with an RSI, same momentum that we discussed today, etc. So you can use the standard ones that come by default with the MetaTrader 4. We can just read on the web what others are using and then adjust accordingly. Don't set those levels too low. Okay. So that's it. It's time for questions. I will start taking them from the list that you have already asked. 1 second. Okay, Obaro wants to see how to add the moving average onto the momentum indicator again. Not a problem. Let me show you this once more. It's fairly simple and then quite straightforward. So let me delete this from the chart. Okay, you go insert from the top left, indicators. You move down to the oscillators category, and you add momentum. Okay, so we'll leave these levels be here as they are. You click OK. So now you have the momentum indicator at the bottom. Now don't insert the moving average from the insert menu at the top, because that will add the moving average onto the price chart. Okay, so that's not what we want. You have to open up the navigator, which you can open up from this icon here with the folder and the star icon in the toolbar. Okay, so here it is. It will open up the navigator. You will have the accounts, you will have the indicators, you have the expert advisor scripts all listed here in the common tab. You open up the indicators, you open up the trend category, you find the moving average and you drag it onto the momentum indicator. Okay, so now the moving average settings pop up. From here you have to select apply to first indicator data. If you don't select this, it will apply it again to the price chart. Okay, so select first indicator data. You click OK, and the moving average is applied onto the momentum indicator at the bottom, and the moving average is calculated from the momentum indicator. So it's not calculated from the price itself, but from the momentum indicator values. Okay, so this is the way you do it. Okay, David is asking, what levels would you use for trading 1 day or 4-hour charts? David, you can try to use the same periods for the indicators. That generally should be fine. However, I personally have not tested out the same periods on 4-hour or daily chart because I rarely trade the momentum indicator myself. I have traded it a bit. This is where I developed this method that I showed you today. But yeah, go ahead and apply it to a 4-hour daily chart. See how it plays out. You might want to reconfigure the periods anyway, because the period of the technical indicators should or will even rely on everyone's personal trading habits and trading methods and strategies. Okay. Okay, Maka is asking, okay, you clicked on something and then you lost the terminal, I guess, right, where it shows the balance. So this is a demo account, as you can see. Okay, this is just for bringing the examples for you. Okay, there is a button terminal at the very top of the MetaTrader 4. So if you click this, it will open up and then disappear. It's right next to the navigator button. Okay, I just removed this because to give more room for the actual indicators and the price chart. Okay, Randy is asking the configuration of the indicators. Sure, the momentum I applied to close, okay, and the period is 45. You can play around with different periods. When you already changed the momentum period to, let's set it to 14, then you can see that the moving average on top of the momentum indicator has also reconfigured itself. This is because the moving average is calculated from the momentum indicator values itself. Okay, so what you can do, you can only play around with the momentum period. I like 45, and you can also individually play around with the moving average period. Okay, you can also set this to, let's say, 27. But this already shows a completely different thing, and I don't think it would be really useful for this method that I showed earlier. Okay, Nishant is asking, the EAs are promising very high returns. What is the realistic return that the best traders should expect? The thing is that, as I mentioned about the expert advisors, A lot of these are scams, so best to avoid them in overall. The best expert advisor, so to say, is yourself. You have to make your trading decisions, and you have to analyze the price charts and the price movements and what the market conditions are and what the market is doing at that very moment when you are trading. This is most important. You are the ultimate trading tool. Okay, I'm sure everybody hears that a lot, but this is because that's true. You are the ultimate trader at the very end, right? Galatasaray is asking, momentum on 50-minute time frame is not recommended. Well, I haven't, as I mentioned, I haven't traded the momentum on any lower or any higher time frame than 1 hour charts. 1 hour charts are my personal favorite. I do most of my trading decisions and trading actions based on this based on this chart time frame. Sometimes I scale up to 4 hour and daily charts just to see the larger picture, what is going on the market. And in some cases, based on some trading methods or strategies, I zoom into 15-minute and 30-minute chart just to pinpoint my trade for the highest accuracy. That's it. Otaka is asking, since you don't use it anymore, would you advise to use it? Not exactly. I do trade using our BSB core strategies mainly. Okay, and this is based on Bollinger Bands. Okay, from my own personal research and technical analysis, I'm constantly testing out and trying out custom indicators, also developing strategies based on the originally included indicators on MetaTrader 4 by default. And as today's webinar is about momentum and the momentum indicator, this is what I'm showing you. This is the strategy that I have worked out some time ago. Okay, I just personally trade the BSP core strategies mostly, as all of our members in our team do. Okay, Obar is asking, does those same settings work on NinjaTrader chart? I'm going to tell you the truth. I have not used NinjaTrader because I'm in love with MetaTrader 4 because of its um, ways how it can be utilized and how you can code the indicators and how you can code the expert advisors to do all of these different things with scripts and then libraries and etc. This is something that I love with MetaTrader 4. So I have, and I'm not going to use any other chart platform anytime soon. Okay, Luis is asking, are the 100.5 and 99.5 levels used to indicate oversold and overbought conditions? The answer is no. These levels I drew onto the momentum indicator just for this trading method that I showed you today. This is only for this trading method. Analyzing or identifying the oversold or overbought conditions of the price with the momentum indicator is definitely subjective because, as you can see, there is no top or lower level of the momentum indicator. It goes on essentially indefinitely. So what you have to do, you just have to draw the center line, which is 100, and then based on what you see on the price chart, let me just do it a bit bigger, then just try to identify the extreme tops and the bottoms on the momentum indicator. So it's not the best indicator to help you identify overbought or oversold conditions, of course, but it definitely can be utilized. Emeka is asking, why use a smoothed moving average, not a simple or exponential on the momentum indicator? The reason behind it is that based on my testing, my technical testing, and visually, it works better because I don't want it to be too sensitive to the momentum the moving average calculation based on the momentum. I want it to be more smooth. So that is the reason why I chose smoothed moving average instead of the exponential or simple. There is no specific advantage with each of them, but this is my personal choice and personal preference, just based on this method that I showed you today. Okay, Lautaro is asking the smoothed moving average. What does smoothed mean? It means the actual moving average calculation formula is different from the very default simple moving average and more sensitive exponential moving average calculation. So the way it's calculated translates the moving average to be not so sensitive to the price data, and it's definitely a lot more smooth. Okay, so that's where the name comes from, smoothed moving average. Louis is asking, is it wise to combine Bollinger Bands for this method, I guess, just to see the conditions and the trading opportunities? Sure, you can, but the entry points themselves don't really cannot really be defined by Bollinger Band formations. For example, in this occasion, okay, that was the example of our losing trade. Let's just go randomly into history. Let's take the next opportunity that we catch. So this would be our entry position. Let me just draw it somewhere here. Okay, somewhere here should be our entry position. Okay, so let's add the Bollinger Bands onto this. Set it to 20, 2, apply to close. Okay, let's go. So as you can see that our entry point based on this method is at the middle of the Bollinger Band. It's not at the bottom, it's not at the top, it's not even at the moving average of the Bollinger Bands. Let's just remove this one. So Bollinger Bands wouldn't really be useful for this method. You can certainly draw them onto the chart, but Louis, you mean to determine oversold and overbought conditions? Yes, definitely. Definitely. Bollinger Bands are a really useful tool in overall to our team, as our most BSP core strategies rely on Bollinger Bands. We consider that as most effective technical indicator in MetaTrader 4 because of the formations it provides and the trading opportunities and trade entry opportunities. So yeah, definitely for overbought, oversold, why not? You can certainly do that. For example, on this occasion, as you can see that the momentum indicator has moved relatively far above our center line, considering the recent price action. And on this occasion, you can see that the price is also above the Bollinger Band. So yeah, indeed, this would indicate a good selling opportunity. So you're totally right. Yeah, applying Bollinger Bands for the oversold or overbought scenario is definitely beneficial. Okay, we're also hitting the clock today. As I see no further questions in the questions section. Thank you very much for attending today. For me, it's going to be a long day. I'm going to drive for 3,500 kilometers now. Wish me luck. and I will see you the week after the next because I will not be there yet. Okay, take care, everybody.